So we're leaving this house and we say we'd like to make an offer. The realtor says, I'm going to put together some comps for you, right? And send them over so you can get a sense for what your offer should be. I looked him in the eye and I said, where we're going, we don't need comps.
This podcast contains the arguably witty banter of two friends, Skippy and Doogles, that like to debate about investing. The content is intended to be entertaining and for informational purposes only, not investment advice. You should do your own research and consult a financial professional before using any of the information in this podcast, and especially before investing.
How are you doing?
I'm good. How are you?
Yeah, pretty good. Let's get to it.
What's up? Do you have personal housing news as well as market housing news, or what's happening here?
Yeah, so on the personal note, we talked a few weeks ago about me crossing my barrier into hashtag adulting and deciding to pick up a crib, right?
Yeah.
So a crib has not been finalized, but I will tell you this. Last night, I went straight YOLO on this housing market.
I love it.
Yeah, YOLO. And so, well, maybe we can we'll back into what YOLO means, but to give some rationale for the YOLO can talk about the market situation. So you sent over to me this week this New York Times article, right, that talked about the national state of the housing market and basically says like we are in such a low inventory situation. There are less than 500,000 homes for sale across the U.S., which is less than half of what like you kind of typically see, right?
Yeah.
In Denver, Colorado, United States, Earth.
Oh, Earth.
It's one of those hot markets that is the extreme of what we're even seeing nationally, right? And so we're seeing this market with such low inventory. I was looking at this one Altios research like report. I don't know if these numbers are exact, but I'm just going to say what the report says. Yeah. The inventory in Denver currently, or as of when they did this, was about 267 homes, which is not a lot of homes.
The full city? There's 267 homes for sale.
That's what it says. That's what it says. I don't know.
Oh,
anyway,
my. Okay.
Yeah, maybe I missed the units. I don't know, but yeah, what I'll tell you though is that as a person that's looking, that doesn't seem crazy. When I just imagine when people are looking for a home, like they're like, here's the list of houses we're going to go look at today or this weekend. Like when we go, like we meet with our realtor and there's like a house that's available. Like, so we all like get all bundled up, and then we go like across the city.
Up, bundle up.
Then we like go across the city and like see a house and then we all come back home. Like it's so anyway, so this is leading to some craziness, right? Like we've been looking for, I don't know, 8 weeks or something like that right now. And basically everything is going well above ask. There's one place we went to where they said you have 2 hours to submit your offer. I mean, it's like silly dilly stuff that I thought only existed in the Bay Area, right?
Yeah.
But apparently, no.
Well, everyone from the Bay Area moved to Denver, so
yeah,
no surprise.
So no, seriously, yeah. So it's kind of crazy. But so we saw this place yesterday that we really liked. Like it's in the location that we want. It is like the house that we want. Like if we could have designed the house, like it's it. And I pulled a straight Doc Brown on the realtor.
Who's Doc Brown?
From Back to the Future, bro.
Okay, that Doc Brown. All right.
Yeah.
Did you pull a straight Doc Brown, like you pull out some vegetables and threw them in the back of your car and then hit 88 miles an hour? Or are you talking about this a little different?
That's not what I was talking about, but I did do that. There are a few zucchinis in the back. But so we're leaving this house and we say, we'd like to make an offer. The realtor says, I'm going to put together some comps for you, right? And send them over so you can get a sense for what your offer should be. I looked him in the eye and I said, where we're going, we don't need comps.
And where are you going? I mean, is this the rocket ship? Is this some Dogecoin or what?
Oh yeah, we got Dogecoin, we got Bitcoin. I was like, I'll offer you whatever you need to make my family and I. We have a family history that was sent along with this offer.
Yeah, like, you wrote a letter, right? You got to write a letter.
Wrote all the things. Pulled out all the stops. I said, show me the stops, and I will pull them out.
Did you include like, I don't know, like an extra Dr. Pepper or like a Disney figurine or like some memorabilia? I mean,
all of it. You name a thing. I filmed a Pixar movie and sent it along.
about your child growing up in that house, right?
Exactly. Have you seen Up?
Oh, have I ever?
Yeah.
Yeah.
The thing we filmed rivals the first like 3 minutes of Up. It is an epic tale. And so we'll see, man. But this is a situation that
Wait. So you haven't heard yet? The offer is
no.
lingering in
Yeah.
the
Yeah.
ethos.
Zombie. Yeah. Did you have to let it linger? Yes, apparently.
You just busted out a zombie. That is
Cranberries, baby. Yeah. So
I
anyway,
don't think
so we'll see.
we don't have licensing rights to the Cranberries, so be careful. Don't sing it too well. That is
You don't
great
have
news.
to
That
worry.
is such a good story.
Yeah.
Good luck
No,
with that.
we're super excited. We'll see.
Now I'm super nervous for you guys though, because the market's so hot. How about I throw in an offer right now that totally sucks? So the anchoring bias that is associated with my sucky offer makes your offer more likely to be accepted. Are we down with that?
I mean, if that's what it takes, throw in some of your value stocks.
Yeah, I'm just like, here, you can have TDS, which is losing money right now. Like, here, you want it? You can have, yeah, that's a great idea.
Yeah. Speaking of TDS, what happened with your portfolio this week?
My portfolio is pretty good. I don't really follow it week to week, but I think I was pretty significantly up midweek, and then last 2 days weren't great.
I ask because so this was not a positive week for my portfolio or the markets.
Yeah,
I'd say broadly. But I was curious because the different types of holdings that we have. I was curious as to what happened with your week.
No, so mine zigged when yours zagged. I had a pretty solid week all in all.
Okay, so basically the market and my portfolio effectively just wiped out February this week. Like that's basically what happened because February was a decently strong month.
Okay.
Overall, but it wiped it out.
And I think actually Monday, Tuesday, a few people freaked out and thought the bubble had ended, which I thought was hilarious. Because if you're not planned for that, you're being naive. I did nothing in the market this week, and my investments are boring, and I'm gonna do nothing in the market next week. So I want the listeners to know, now that we're worldwide, that sometimes the things we talk about are just the interesting things. They're not necessarily things that you should jump into, unless you're Doogles and you're crazy. I mean, if you want to lose money, then you should invest in the things we talk about.
I'm like the Pied Piper, baby.
Oh, dude, I love that Silicon Valley show.
Yeah, we just started watching it again. It is
it's so good. The first,
it's so epic.
Yeah, I love it all.
So epic. Let's start off with the bubble. Let's start off with the bubble ending.
Okay, bubble, hit it.
So first, I think everybody that's been listening knows that, and according to Doogles, the bubble will end over the next couple of years, predicting. But the bubble did not just end because the Doogles indicator is saying this is not the year for the bubble to end. So I'm just going to stick with that. But at the same time, I can see where folks were thinking that because like stuff started getting hit this week. There are a couple really strong negative days. And I think it's interesting, just based on conversations I've been having with people, to talk about why those days were negative, because I think there are some macro indicators that some folks just aren't in tune with.
I mean, let me just jump in and call BS on almost all of this. Like, who cares what happens day to day, Doogles? You're getting caught up in the noise here.
To your point, it's important to not get caught up in the noise, but it's important to understand the noise. I think because at least in my mind, because if you understand the noise, then you can not panic. You buy into that?
We differ here. Nah, but go.
All right. So there are two things. One is my girl Tina. You familiar with my girl Tina?
Oh, there's so many girls named Tina. No,
there is no alternative. So that's the. There are many factors that go into what's going on in the market, but one of the things that's going on in the market right now is my girl Tina cruising down the streets. There is no alternative. Acronym Tina. That's basically that when you look across all the asset classes that exist to invest in, right? People generally are saying, and by people I mean like professional investors, institutional investors are saying, my money has to go somewhere. I'm not going to sit all in cash. And so when there is no alternative, you look at what's going to give you the best return or the best return for your risk profile, whatever it might be.
Here, and that's for your Tina thing. Let me just jump in. So GMO's 7-year asset class real return forecasts. U.S. large equities -6%, U.S. small equities -8%, international large -2%, international small -0.5%, emerging -2%, emerging value +5%, U.S. bonds -3%, international hedge bonds -4.4%, emerging debt 1%, U.S. inflation-linked bonds minus 3.6%, U.S. cash minus 0.8%. Tina.
Basically, I think what Skippy is saying is that if you know where to look, there are alternatives.
No, but I'm agreeing with your
saying?
Tina hypothesis. There's a
there's not a lot.
few places, but barely less than normal by a long shot.
Yeah. So one of the things that started happening this week was Tina. There is no alternative, and there was a little bit of like insight into a potential alternative. Meaning, so if you look at the long-term treasury yields, the 10-year note is what's looked at, and it went from, at the beginning of this year, we were at a low of about 0.9%, and it hopped over, it broke 1.6%, right? And so that's one thing where you're saying, now that's not a high yield, but it's like something, right? And so basically there's some alternative. It also, that comes along with fears of inflation, all this other stuff, but people are saying, okay, there might be some alternative that could exist there. The more important thing that happened this week, though, so that was number one. Number two is that with that, basically this gets back to the housing conversation too. Treasury yields have a pretty strong influence on home loan rates.
Yes.
Right. And so effectively, when the yields are rising sharply, like there's a hypothesis that people are going to start not wanting to necessarily like refinance and take out mortgages.
Yes.
Right. As much. And so when that happens, then you start to say, well, what happens with like the mortgage bond and investors? So basically you have these people that are now going to have to wait like a longer period of time to be able to collect payments from all the mortgage bonds. They don't think they're as favorable. And so they start to sell them. And does that make sense?
When you switch to time frame, so you were talking about basically rates and how long-term, like the 10-year is going to impact mortgage rates, right?
Yep.
Which I follow you there. And then you switch to bondholders delaying payments.
Basically, if you think about someone that's holding a bond, right? So a bond it's a combination of a coupon that you have that you're get, like a coupon being the payment you're getting on that interest rate, and then the amount that the principal you can collect at the end. In the world that we're in right now, people are betting, these bondholders are betting on more people, the ability to lend to more people, right? So they're basically saying like, I can lend to more and more people because there's like this increase in refinancings and home loans.
I get
right?
your time. Yeah.
And so basically now if they're saying that these people are not going to be refinancing, then they're basically saying like, the time that I was talking about is I now have to wait longer in order to collect like the money that I think I was going to be able to make in the short run.
I mean,
like,
I don't know that
you're betting on the fervor. You're betting on the fervor.
Yeah. I follow the more lenders or the more creditworthy folks. Yeah, I follow that.
And if I can't bet on the volume, right, that's coming through effectively, then I actually have to wait for the loans to mature, and that's not worth, like, it's not worth me actually holding these things in order to get like the low rates that I'm getting on them, because I'm actually betting on a volume play, not on the play of what the loans are actually worth, and so therefore they're not worth holding. Therefore, they're selling. Now, the thing that's holding up that end of the market is that the Fed has like $40 billion in the mortgage market, and so like that's helping to support the whole thing, so it won't like fall apart. But I think that's one of the things that's actually occurring in the market right now that's leading to the sells and then the increase in yields. Can you buy into that or no?
A little bit. I just think I don't care about short-term fluctuations like weeks, months. I care more about years. I'll tell you that if I was predicting things, which is a stupid thing to do, bond rates are going to go up because they're at historic lows. And so to see that trend start to happen this week is kind of interesting, and to see people's reaction to it is very interesting.
I agree with you. Like I think paying attention to years and not days is important, but I know that we differ in opinion here. But I do think that something for some folks that like just think about this stuff logically and need to understand what's going on, that it's helpful to have some narrative around the short-term fluctuations so that you don't think that this is the end.
Completely support that. So here's how I'm taking your point, which I think is a very good point, but it's just what happens with debt, right? So lenders, whoever, when interest rates are going down and there's more and more demand and there's more and more credit worthiness, we've talked about how there's more margin debt in the equity market than there ever has been. Like, that's all good until the music stops, right? Because the reverse of that trend is, yeah, say you're just a mortgage lender and you have for the last 20 years basically had rates going in your favor. So you always found that next deal. Well, when rates flip and less people become creditworthy and less people can afford the speculative housing bubble you talked about earlier and all those things, the market dries up really, really quickly because it was all funded on debt, and that music eventually stops there. It's a big deal.
It's a Ponzi scheme. I know you're not big into econ, right? But but I'd bring up Minsky, an economist, like that he talks about the basically stabilization creates destabilization.
Yes.
And the markets have effectively turned into a Ponzi scheme at one point where you need the next hit in order to finance the last hit. And it's the point where the next hit doesn't come.
I love that. Nice work,
Minsky.
Doogles.
Look it up.
Nice work.
Let's go ARK to wrap up our bubble conversation.
Perfect. You kick us off there because I think you could better talk to it than me.
Yeah. Well, there's one component of it that I'll talk to here is weeks like this are what show the vulnerability and fragility of something like ARK, right? Which has trademark last week. The YOLO trip to nonsense was what that ARK's portfolio was called. I'm going to highlight just one area of that portfolio that was also highlighted last week, but I think is particularly fragile, and that is in like the biotech healthcare side of that portfolio. That's really, really fragile, and this week pointed that out. And it didn't point out this week the fragility because of the drops necessarily, directly because of the drops. It highlighted it because last week we talked about the 13F for ARK, but the side of it that we talked about was the percent of ARK's portfolio. We did not talk about the percent of the companies that ARK owned, and that's where it gets real fragile. I don't know if this is where you were trying to go.
No, this is perfect. Yeah.
The ARK owns over 10% of something like 20 or 30 stocks, right? And many of these are in the biotech healthcare space. And what ends up happening, it's kind of like the short squeeze situation we talked about before, although it has nothing to do with shorting, is if ARK hits a liquidity like crisis because of drops, they're going to have to start selling some stuff. And when you own 20% of a stock, which they have multiple stocks they own to over 20% of, that you then have to start selling, that's a meaningful percent of that company that then has to drop. And so it feeds on itself.
Yeah, right. There's lots of ways this can work. One is the investors in ARK are probably going to be more volatile in all Cathie Wood stuff because she's been like superstar. So they're not the people that are like, oh, I'm buying this fund for the next 10 years. They're often the people that are like, oh, did you see it went up like 50% in the last 3 months? Like, I'm buying this to make money. So if that reverses, they are very likely to pull their money out. As they pull their money out, ARK has to like redistribute, balance all their funds out. And that could mean, again, exactly what you said, you own very significant amounts of these companies. The reason you own very significant amounts of these companies is because of the high flying nature of your fund over the last several things. So it becomes a self-fulfilling prophecy of you scream to the top and then you fall off a cliff coming down the other side because of all the almost just the math at play here.
You can see all the building blocks or crumbling blocks, depending on how you want to look at it. You can like see them. It's a question of like, what is the thing that that makes it start to like, what's that Jenga block, right? I'm putting my hand in and I'm pulling out this block, right? I'm good at that game. So I know the Jenga box I'm pulling ain't gonna make it fall, but some of them might, right? But you see these Jenga blocks and you can see where it can all crumble. And it's
very quickly.
And so what does Cathie do this week?
I don't know. I don't follow Cathie. I mean,
quiz player. What do you think she did?
She took the middle block from the middle section of the tower and managed to survive.
She took out the middle blocks, took out some of that liquidity, and bought more Tesla. Is what she did this week.
Well, the crash and burn is going to be great. I want to give credit to good writing. So the Bear Cave at Substack.com had a pretty good breakdown of the ARK stuff. If you want to check that out. So, hey, check this out. So that leads nicely into, we've talked a lot about the negative side of the bubble that's happening right now. I want to talk about the positive side, because the positive side is really fun, and I don't think we've done that justice. And also, I want to make you say fungible a lot. Sound good?
That sounds great. The positive side is my B of A account, so I'm loving it. Let's talk about it.
So, oh man, super rare art. Have you heard of it? Do you want to give a background for the listeners?
Do I want to give a background to super rare art?
Yeah. Do you know about
I mean,
super rare
are you
art?
talking about my 7-year-old's art? Because that's super rare, if that's what you're talking about.
All right, you're gonna be a jerk, huh? So
I'll
NBA
always-
Top Shot, super rare art, have been growing in excitement for the last several months. I think it's fair to say. Both use blockchain-backed technology and NFTs, which are non-fungible tokens, to basically validate a piece of digital art. So the easiest one to talk about is NBA Top Shot, because everyone's familiar with like baseball trading cards, right? So when I was a little tyke, I was collecting all the baseball trading cards because I wanted the next Mickey Mantle, because I wanted to retire, right? And me and my buddies had whole schemes around this, right? Did you?
I've got a Pete Rose and a Hank Aaron I'm holding on to, just waiting for them to be worth something.
Okay, so actually about like 5 years ago, The Economist did this deep dive on how the price of the Mickey Mantle card for kids like me and you completely destroyed the market, because it effectively created a baseball card bubble. So all the cards I have, I mean, I have tons of like Ken Griffey Jr. autograph stuff.
Tons.
So does everyone else, right? So it's like basically worth nothing. What's interesting with NBA Top Shot is it's the same sort of thing, but it's all digital. It's all on your phone or your computer. And you basically buy with cryptos, and the authenticity is backed with cryptos. This is a really exciting idea. Like, again, not an investment.
Super creative.
It's awesome. And it's more than just like a digital picture. It can be like a game-winning shot, can be whatever else. I mean, me and everyone else that's heard about this, that's a sports fan, I'm sure logged in. Like they shut down. You couldn't even create a new account for a while. The demand was so great. I still haven't found a way to buy anything. Like, it's just a super, super cool idea.
Yeah, I think it's really cool. I think it can get really creative, and it's one of those avenues where more people can start to get involved, I think, in this stuff, because it's an outlet for creativity for folks that might not be able to, I don't know, to flex that in other ways to actually be able to make money. And as you mentioned, the art itself is like, it's awesome. I mean, it's
Awesome.
it's epic. It's epic. There are some of these, not to take us too far from that, but have you heard of Otis?
No, tell me about Otis.
Yeah. So Otis is a market for, it's not nearly as, in my opinion, not nearly as cool, but I think it's interesting from just these obscure markets kind of coming up. It's a market to be able to own portions of, like, I'd say rare, quote unquote, rare goods that are part of pop culture. So like you can, if you want like the first Jordan 1s that some celebrity wore, right? You can own like 0.6% of it at a time it goes on auction. Or if you like, if it's like Spider-Man, like, issue number 3, like if you want to own a part of it, you can like buy into it. Look it up. I have no interest in owning like 5% of Spider-Man, like issue 3. I'd rather just like, if I want it, I'm gonna buy. I don't want it, but if I want it, I just buy it. So I don't have an interest in that. But I think the market itself is like a sign of something pretty cool.
Oh, it's super awesome. So I have some stats here. Now we're switching over to another marketplace called Super Rare, which is digital art. On Super Rare, in February, they predict sales will exceed 10 million in total sales. There's digital art, again, like created by artists, and it's almost like GIF or video format. There's a lot of stuff going on there, selling for upwards of $70,000. Like, it's an incredibly new space. And so I don't think we've talked enough about that. You also got the stuff happening with NASA and the stuff happening with Starlink, with Musk and everything else. Like people are talking about traveling to Mars in the next 5 years and like sending people to Mars. There is so much cool stuff happening right now that I fully understand the euphoria. And I just wanted to talk about that a little bit, because we haven't done a good job of expressing why some of these things are entering bubble territory. Now, I think what's scary is these really cool ideas 99% of them are going to blow up and be worth nothing. 95% of it, I don't know what it is. Maybe it's only 70% of it. The stuff that lives on, the stuff that makes it through the 2001 internet bubble, I'm sure I'll be kicking myself that I didn't get in right now.
Historically, the folks that create the first generation of these things, like most of them aren't going to make it, but they create either asset classes or just innovations that can live on and be awesome for whatever the next version of what we think is the hotness today. I think that's awesome. Can I drop in? So this might feel like a bit of a non sequitur, but on the art piece, can I drop in a little bit of knowledge that I thought was interesting?
Please.
And I'm going to go straight America. I'm going to be America right here for a moment. Right. This is a country founded by gangsters. We brought up Hamilton a couple weeks ago, right? And I love how Lin-Manuel, my boy Lin, he was talking about, not Jeremy. I mean, he's fine, but Lin-Manuel Miranda.
Hey, I like Jeremy. Don't talk.
Jeremy's fine. He's not my boy.
Linsanity over here.
That's fine. But Lin-Manuel, he was saying that when he read the book by Ron Chernow, I think is how you pronounce his name, about Hamilton, he was like, this dude's a gangsta. He needs to like be immersed in hip hop culture, which is right. This country is built on gangsters, and there is an art gangsta that I want to talk about that unfortunately passed away in this last week. Right, I'm gonna get the name a little bit wrong because my Italian is rusty. I haven't spoken fluent Italian in over 100 years. This guy is Arturo Di Modica, I think is how you pronounce his name. Do you know who this guy is?
No, you need to fill me in,
all man. Right. Art gangsta. Those two words usually don't go together unless you're talking about Banksy. But today I'm going to talk about this art gangsta. So this is the guy that created he was a sculptor. He created the sculpture that of the bull in New York.
No way.
Charging bull. Yeah. So he passed away from cancer, 80 years old, last weekend. And now, so that is not why he's a gangsta. The story of his gangsterdom comes from how that bull came to be where it is today, which I think most folks don't know. So I'm going to drop some historical knowledge. So the bull, this guy, he's from Italy, hence the name. He came over to the US in the early 1970s and started sculpting and got like pretty rich and famous, inner circle famous, right? Like the people that know sculptors type famous, but made a bunch of money. And he felt like he owed a lot of that to America, this place that he could come to and fulfill his dreams.
Yeah.
So Black Monday in October of 1987, stock market drops over 20% in one day. And America started to get like sad, right? Let's say like we're entering some sort of like depression or something like that. And because America had given him so much, he said, I need to give back to America. So he spent over 300 grand building this sculpture of a bull for the stock market. Yeah. Yes. And so now here's where it gets real gangsta. He wants to leave this bull outside of the New York Stock Exchange as like a symbol that we're going to come roaring back.
Yeah.
But he doesn't have any authority to do that. And so he and some of his friends study police patrols to understand when they start going around that area. So when they can leave the bull. And he studies the police patrols. There's like, it's like minutes, right, that they have between patrols to be able to drop this thing. And he goes and like drops it. And the New York Stock Exchange, like they see that there's this bull there and it's an unauthorized bull. So they had it removed. And the public wanted no part of that thing leaving. And so there was a public outcry over this bull being taken away. And so they put it back and it's been sitting there to this day. So this is like, this is an unauthorized sculpture that was created. That is the reason why that exists today. But it is like, it's like often seen as like a symbol of Wall Street that Wall Street did not ask for. America is gangsta.
America is gangsta. That is an amazing story. And for those who've been, like, it's such a freaking cool thing. Like, it's just, you want to take your picture with it and ride it, and like, it's freaking awesome.
Yeah, it's great. And can you imagine like that is the symbol of Wall Street in my eyes. Like as I grew up on the East Coast, I was like seeing that. I don't even know if I knew what Wall Street was, but that was like New York. That's like a part of, Empire State Building.
That part of New York. Yeah. Love the knowledge there. All right. I think we're moving into a quiz time for you though.
Okay. So, all right, here we go.
All right. First, do you know that the price of lumber is up like 70% in the past few months?
I did know that. Okay. Because of my housing search.
What is driving that increase in the price of lumber, Doogles?
I don't know specifically. As an economist, I would assume that there's some kind of a supply crunch.
Yeah, that's what I assume too. It's actually sawmill capacity. The price of raw lumber like pine is at 1992 levels. Like it's at its lowest point. But there's been this consolidation with sawmills that's the entire backlog right now. Also, over the last 20 years or so, a lot of land conservationists have like encouraged people to plant more trees on their land. So there's more supply in Georgia and a lot of the South where they grow a lot of that stuff. Isn't
That's
that
interesting.
crazy?
Yeah, that's really crazy. Makes me want to look and see if Kimberly Clark, where they're trading at. Anyway, continue.
Quiz number 2. At current price levels, the energy use of Bitcoin is equivalent to what country?
France.
You're a little high. New Zealand.
Oh, okay.
So we talked about this before. We know as the price goes up, basically the rewards for mining Bitcoin get greater. So people are willing to invest more in computing and energy resources. What price do you think Bitcoin would have to be at to use the same amount of energy as the United States?
I'd say 476,249.
Hey, you're pretty close. Off by a factor 2. If Bitcoin goes to $1 million per coin, they say the energy use will be about the US. Now, just give me some reaction to that. That scares me. Like, that does not seem okay.
It scares me as like a human being. It gets me real excited about driving the earnings of NVIDIA.
Because you got to make more money that way.
NVIDIA, a lot of where their revenue and whatnot are coming from today is in a surge in the price of chips, which is coming because people need computing power for Bitcoin. That is like a
okay. Last quiz, and I think you know this one. What percentage of the population of the world lives on less than $10 a day?
50%, something like that.
I think it's 65%. Let me check the numbers here. So that goes in. I actually meant to lead off with this. That goes into my crazy idea that I want you to shut down, but I need some help from the listeners now that we're worldwide. So I want to find individuals, hopefully multiple individuals, living in countries like places in Africa, Nepal, India, you name it, who are living on.
Wait. So when you said countries like, and then you just named countries, can you give like the category of country that you're talking about?
If you've read the book Factfulness, he breaks it down into 4 tiers of income worldwide. So roughly 7 billion people. You have level 1, 2, 3, and 4. On level 1, you're living on less than $2 a day and searching for basic needs, right? That's about 1 billion people. Level 2, living on less than $8 a day, about 3 billion people. And the jump in quality of life between level 1 and level 2 is just massive. Level 3 is less than $32 a day, and level 4 is the US, Europe, and places like that. I have a crazy idea where I want to see if we can leverage our listener base to be in touch with people who hopefully have smartphones that are on, say, levels 1 or 2. Because I would love to explore all the excitement of the bubble that we just talked about and see if we can send them a month's worth of wages to hopefully take that next step up, right? So I think the technology now exists, and I'm just excited about the idea. I think that's a fun challenge, and I'd love to see if we can tap into some of that, because I've really been moved by how meaningful some stuff that to me or you probably, it'd be like an extra cup of coffee or whatever, and it could really be meaningful to someone else to advance the quality of life.
Redistribute the bubble.
Yeah.
I think that's awesome if we can figure out how to do that.
Well, I think first I want, if possible, I want people to hit up the Twitter account at Skippy Doogles and try and link us together with some people who are in that range, level 1, 2, even level 3, if you have those. I mean, I think we might leverage crypto to do it, but there's lots of options.
Oh, yeah, I love it. At Skippy Doogles, people, give us thoughts and ideas and connect us to folks. And that book, Factfulness, I think is worth folks reading. I think the high level takeaway of that book being the world is getting better, but we still have work to do, I think is a great one and one worth embracing.
Douglas, do you remember like getting the things in the mail when you were growing up about the kid from Somalia and how you could adopt him and like you could put his picture on your refrigerator and stuff?
Yeah.
Did you ever see those?
Save the children.
Yeah, save the children. Like I just have this crazy idea that with smartphones and the technology that's available to us today, you can do that on a one-on-one basis without kind of writing a check to some foreign agency and never really knowing how it all works out. But we'll see if that hypothesis is true or not.
No, I think there's the brilliance in that. The going back again to like the logistics of how we get this going, it'd be great to get some like thoughts and ideas around. But I think you're absolutely right. I mean, it's interesting when you think about. I'm going to equate this to political campaigns for a moment. When you think about the shift that happened during Obama's run, you go from like large donors to I don't want to know what his average donors were, but it was tiny, right? It's like dollars. It was like the average donor, but it built up to be a lot. I think in the Redistribute the Bubble, campaign that you're trying to kick off here, I think you can have people that don't necessarily have to get like how the way I see like Save the Children happening today is either you see an ad on TV, right, where you have to then donate whatever $30 a month, or someone stops you on the street to tell you about it and you like donate $30 a month. To have a crypto that doesn't have a middle person, right, taking out the overhead that charities take out, which we've also talked about in a previous episode, right, and have just small amounts that ends up adding up to like something significant, quote unquote, small amounts from level 4 are huge amounts for level 1. And if you can have a medium that doesn't, to your point that you brought up before, that doesn't require all the nonsense that the financial systems take out today, that doesn't require the overhead that charities take out today, and can add up to meaningful stuff for people in other countries, I think people would be really into it.
Yeah, so let's try a proof of concept here. If we have any success, we can start to we can get creative about how we fund that pool. But I'm sure our listeners would dive in and we could do that. Let's just see right now if we can prove the concept, find a few people that we can help, and that'd be cool. Okay, what were your thoughts 3 years ago when AT&T bought DirectTV? You, I believe, have been a DirectTV guy for like 2 decades. Like, aren't you all about DirectTV?
Is that a serious guy? I've never owned DirectTV. I don't know much about DirectTV. I do, disclaimer, I do own AT&T stock.
Oh, I used to, but I ditched it. Okay. So did you have any, I had really strong thoughts when that acquisition was taking place. Did you?
Like Cisco? You said you had thong thoughts.
Sorry, I thought you meant Cisco the company, and then I thought you maybe meant Cisco the one-hit wonder from TRL, and that is brilliant. Strong thoughts. I had some strong thoughts. Basically, that was a dying business. Of course, it was going to fail. It was a stupid thing to do at the time. Here's the rough numbers. I haven't done a deep dive in this. In 2015, I guess it's 7 years ago now that this acquisition happened. They bought DirectTV for about $67 billion. They just sold 30% of the stake at a valuation of around $16 billion. So you just lit $50 billion on fire over the course of 7 years. Like, I'm happy to do that for you, AT&T, if you're looking to hire.
Like the highest level macro play, like makes a lot of sense for what AT&T's been doing, meaning media consolidation in order to take advantage of cable, right, that you've laid down. I mean, like when I say cable, I mean like literally like the stuff you put in the ground. But the way in which they execute it is sadness. Like my only bet on with AT&T is HBO Max, which is basically like I'm betting that at least keeps it even so that I'm getting the dividend return. Like that's effectively it in this world. This Tina, right? Me and Tina are holding hands, and I'm buying AT&T.
I mean, and I like HBO Max, don't get me wrong, but let me go back and just make sure I'm understanding. So in 2015, I don't even think the business made sense because they weren't buying Comcast or something else that laid a bunch of coaxial cable that they could expand their network to get like gigabyte internet service. They were buying a satellite provider, and AT&T already had a service provider at the time. So the most valuable thing, well, not the most valuable thing, but one of the really valuable things with DirectTV was their NFL contract, Well, just wait a few years and spend the $50 billion on the NFL contract, and you're gonna like basically build your own DirectTV. It never made sense to me.
Yeah, that's the issue. Like the issue is in part of what you were saying is you're like, wait a few years and that's just not the way like corporations work sometimes, right? They can choose to, but I think many times they end up acting on like they see what competitors are doing and see what the market's doing, and there's a call to act. And so
Yeah.
when you see media consolidation, they're like, what can we buy? But one of the issues that I see that happens in business generally is you go in with the question, which I'm sure is the question that was flagged in the boardroom at that time, which is what are we going to buy to make sure we're competitive? And
Yeah.
not should we even act?
Yeah.
Like you've already assumed that there should be an action. And then if you're in the market at that time saying, what can we buy? Then DirectTV makes a lot of sense.
Any boardroom that's asking that question right now, and I know there's a bunch of CEOs that listen to this pod, Doogles. I mean, you need to take a step back, because if you're saying what should I buy right now in the bubble territory, it's probably the wrong question. So don't be AT&T. All right, I got one more thing to hit, and then I think we'll wrap. Coinbase. Coinbase is I think the first or second. It's based in the Bay Area, first or second largest kind of crypto exchange. They have wallets, they have trading, they have everything else, right? Founded in 2011, if I remember correct. They are going to go public soon, so they filed their S1,
which is brilliant. Like they I don't know if they could have calculated to the day to go public at a better time.
Oh, it's perfect. So I just found the stats interesting. 43 million verified users, 3.4 billion in total revenue, although 96% of their transactions is revenue. Or sorry, 96% of revenue is based on transaction fees.
Okay. I was that makes sense.
Yeah. Net income of about 300 million. It's just crazy because it's basically all fees on people buying crypto, and that really speaks to how ridiculous a lot of those fees are at the moment in my eyes.
Yeah, I mean their long-term play basically has to be part of what you were talking about before, where there's it's pure volume play in the end. That's not how they're making money right now. I mean they're making money on the volume right now, but they're making money on the volume of nonsense right now.
Yeah.
But the long-term play has to be there's utility that's established somehow in crypto, and you basically it's the 1% of China, thing that folks talk about. Like you're getting like a tiny percent of something that becomes huge. Right now, they're getting like it's not huge, but like a meaningful percent of nonsense. But long term, it has to be they're getting the tiniest percent of sense, which may or may not happen. But they've established themselves pretty well in the market.
I mean, I think that's a fair hypothesis. I don't know why they can't be like a Fidelity for crypto.
So the Fidelity of crypto, I mean, if you want to debate, we can debate that. I think that's a heap of foolishness that just came out of your face.
Oh, go for it.
Yeah. Well, basically, like there's no Fidelity for currencies. So why would there be a Fidelity for crypto? I think the sense you were spitting a week ago, I think was great in that like you find a utility for crypto and then you build off that utility. But the crypto itself, I don't think that alone you can build a business around. To go back to what I was talking about before, if you get the tiniest fraction of a percent for Coinbase's future, I think that they need to basically what they need to do is figure out and fuel the utility, and they could become like a roll-up business for organizations that are that have like strong utility in crypto, and they take a percent of that. I think that makes a lot more sense. Like it's this is going to be a crazy analogy that I can't even explain right now, but it's just what popped into my mentals. Is more like the Facebook of crypto is what I would actually say is if they can make it so that they get if you want to have utility in crypto, you go through Coinbase.
Yeah.
And so the utility of crypto they own, I think that makes a lot more sense. I think it's a high volume Facebook, like Google type play, where they have to be the utility of it.
I love that you push back, and I think we should keep this debate going. The crazy thing is, because you brought this up, like, do you know how Bitcoin is taxed right now? Because that's interesting. It's not taxed as a currency; it's taxed as an asset. So long-term capital gains, short-term capital gains. That's another reason why, as a transactional service, Bitcoin especially is kind of challenged. Let's say, not only are you using the energy consumption of New Zealand, but then if you want to pay someone, if you want to pay Domino's Pizza by Bitcoin, which I believe you can do, you're going to be taxed as a short-term capital gain on that for the Bitcoin that you bought a week ago to fund that transaction. So that's the US government and all big governments like getting in the way of things. But yeah, let's see where Coinbase goes. I don't know if it will be that. I mean, that's where I think more on the Fidelity side of things, but I hear what you're saying. The gateway to get there is what you're talking about with the Facebook analogy. And you need, with any highly technical thing, whether it's like building websites or whatever, you need these intermediaries that allows the masses to come and consume that. And I think Coinbase has a head start there, which is interesting.
Yeah, it just from what I've seen, just from like a business standpoint in the past, and I haven't done a deep dive on Coinbase, but I think I might now because I'm going to read their S1 right now that it exists out there. I haven't done a deep dive with them, but just generally what I've seen in business historically is if you sit back and are purely the intermediary for something that doesn't have utility currently, like that is not going to work for you. Like you have to make sure the utility comes into play, and I think it's in their best interest to like feed and own that utility as much as possible. They might at some point, if they start to own the utility and they're making money in the back end, like my boy Sherman's going to come after him, right? But that's an antitrust joke. Antitrust and joke usually don't go together, but like that's definitely going to be broken up at some point. But I think that they have to do that in order to figure all this stuff out.
Yeah, well, I might read this one too, but you should. The more you play around with the app, I think you'll see that they are very much advocating education. They're trying to fill that void.
There is no try. There's only do.
I mean, whatever.